Hey guys, it's Pilar Newman and welcome back to my channel. It's that time again to look at the best stocks to buy now in June of 2021. I've rounded up my top 5 best stock picks that I'll be sharing with you here today in this video. Now, if you want access to the top stock tool I personally use that helps me find undervalued stocks in the market, then check underneath this video for the link to that. Now, once again, just as a quick reminder, this is my research that I'm sharing with you. If you choose to buy the stocks, that is at your discretion. Thanks, and let's continue on with the video. First on this list is Materialize, ticker MTLS. Materialize is headquartered in Belgium and is one of the largest and most long-established independent companies in the 3D printing and additive manufacturing sector. They have over 30 years of experience and offer a wide range of medical software solutions and 3D printing services. One of the reasons I'm a big proponent of this company is because MTLS has a large runway for growth in multiple industries. 3D printing technology is currently being used in a wide variety of industries, including healthcare, automotive, aerospace, art and design, and consumer goods. In the aerospace sector, the 3D printing market is projected to grow beyond $3 billion by 2022, mainly due to the growing demand for lightweight 3D printed parts for aircraft engines. In the car industry, 3D technology is extensively being used for rapid prototyping, and in some cases, it is being used to produce car parts that may even be in your car right now. Back in early 2019, Materialize was on my radar, and I purchased a couple of hundred stocks during that time, but I decided to sell all my shares the following month for a quick $500 gain. This time around, I'm looking to get in again and hold for long-term gains. Materialize took a hard hit during the 2020 health crisis as airlines stayed grounded and vehicles gathered dust at the car dealerships. This brought the price of this high-growth company down to a reasonable risk-reward ratio. In their recent earnings report, the executive chairman stated, while the global economy was still significantly impacted by the pandemic, Materialize performed well. We continued to bounce back, and our revenue came close to the level of the first quarter of 2020, which predated the pandemic. We are particularly encouraged by the fact that alongside the revenue growth of Materialize Medical, which has been performing very strongly since Q3 of 2020, Materialize Software also posted growth this quarter. I'm currently still on the sidelines, haven't purchased back in, but my preferred target buy range is between $20 and $24 per share for Materialize. But I'll be looking to get in even at $26 since this will be a long-term hold. Currently, Materialize is trading at $26.99. Next is Momo, ticker MOMO. Momo is a Chinese online dating app that has suffered a rough patch over the last few years. Even since before the 2020 health crisis, the company has been on a decline and currently trades at $14.03 from its high of $53.60 back in mid of 2018. So what happened to Momo that caused its growth momentum to hit a brick wall? Well, as with a lot of China companies, state regulators thwarted their growth, calling out Momo's app for having what they believe to be offensive content and promoting prostitution. But it wasn't just Momo. Many other live streaming China apps also received similar backlash, and it rightfully so scared off tons of investors. Additionally, Momo does not generate a majority of its revenue on ads and subscriptions, such as its American counterparts Match and Bumble. Instead, Momo relies heavily on live video streaming as their revenue source. This took a big hit in 2020 as some of their top paying users curbed their spending when the health crisis hit, with live streaming revenue declining over 31%. With Momo now diversifying their revenue generating income to avoid the heavily reliance on live streaming, and with the China economy reopening and more users starting to use the online dating app again, right now may be an opportune time to get in on the Momo turnaround opportunity. Much of the bad news is already priced in, and with Momo having a massive cash reserve on hand versus debt, they are a prime growth candidate for 2021 and beyond. Lastly, on top of adding more revenue generating services, Momo is also pursuing other growth opportunities, including purchasing other dating apps, one of which is popular with the Gen Z demographic. They have a lot of good catalysts for future growth, which makes Momo one of my favorite picks this month. Next up is Unity Software, ticker symbol U. Unity Software is a leading platform for creating and operating interactive real-time 3D content. It is used to make virtual reality and augmented reality programs, such as to create video games for PCs and mobile devices. As of now, nearly half of the world's games are built on Unity. Unity is also increasingly used for 3D design and simulations across other industries like film, automotive, and architecture, and is now used to create 60% of all augmented and virtual reality experiences. The platform has become so popular and the growth opportunity so wide that even Facebook debated acquiring the company in a multi-billion-dollar acquisition. Unity earns revenue through subscription fees for use of its content creation software. They also earn money through revenue sharing and usage-based services with its customers. One of the reasons I have been accumulating Unity software stock is because of their consistent year-over-year growth. Unity management's long-term goal is to grow annualized revenue at a rate of 30%. Over the last 2 years, they exceeded this by growing at a rate of 42%. Though for 2021, Unity is forecasting a slower rate between 26 to 32%, which is still relatively within the range of their long-term goal. This Unity software stock does have a high premium valuation due to their consistent growth and $29+ billion addressable market, so please thread cautiously into this stock. Personally, I have been purchasing this stock in chunks over recent dips. If you believe augmented reality is the future, then this stock is one to consider. Now we have Baozun, ticker symbol BZUN. Baozun is a Chinese e-commerce stock that helps companies break into the China e-commerce marketplace by managing various aspects of the e-commerce value chain, including the store operations, digital marketing, consignment services, and other customer service offerings. They are often referred to as the Shopify of China, but unlike their Canadian counterpart, Shopify, that attracts small and medium-sized businesses as customers, Baozun focuses on multinational companies like Nike and Godiva that need help operating their e-commerce business in China. In my last couple of videos for top stock picks to buy, I've mentioned other promising Chinese e-commerce companies. The Chinese e-commerce market has massive growth opportunities as a whole, which is why I'm extremely bullish on many of these top Chinese companies. You can check out my other 2 videos at the end of this one for other companies mentioned. Baozun is a company that has had consistent average growth rate of 24% over the past 5 years. For 2021, analysts are forecasting accelerated growth rates of 37%. But here is what I especially like about this stock outside of the actual fundamentals of the company. The stock has a strong resistance point at the $30 level. It has not dipped under this price point since May of 2020, and even when it did dip below $30, it only did so for a day or two before bouncing right back to over $30. This stock is, in my opinion, one of the strongest stocks to buy this month for long-term gains that offer a low risk, high reward ratio. Last but not least on this list, we have Splunk. Ticker symbol SPLK. Splunk is an American data analytics company based in San Francisco, California, that provides cloud-based software services and solutions. They are expected to announce earnings on June 2nd, so if you don't like to be in on a new stock buy during an earnings report, then you may want to wait until after June 2nd to decide whether this is a good stock choice for you or not. Splunk has been on a downward spiral since August of 2020 from a high of $220. Recently, they migrated over to a recurring revenue-based model and away from perpetual licenses, which has affected their earnings numbers on the surface level. Yet in reality, Splunk is showing a strong growth momentum. In their fiscal fourth quarter ended January 31st, they posted better than expected results. This included a cloud-based annualized recurring revenue of $810 million, which is up 83%. Total annualized recurring revenue was $2.36 billion, up 41%. Cloud revenue in the quarter was $171 million, which was up 72%. And Splunk also stated it had 510 customers with annualized recurring revenue above $1 million, up 44% from a year earlier. Splunk did state that it expects their revenues to continue to be volatile through this transition. They are also cautious to overly state growth projections after the 2020 health crisis and until things settle down more. Splunk currently trades for $121.20, but some analysts are giving it a price target of $265 after announcing the planned acquisition of TrueStar, a cloud-native intelligence management tool. There you go. Those are my top stock picks for June 2021. If you want to see my stock picks for previous months, definitely make sure to check for those links underneath this YouTube video. Hey guys, if you've enjoyed this video, definitely go ahead, hit that like button as well as subscribe to my channel. I'll see you again in the next one. Take care. Bye-bye.